Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for Thursday, January 15th, 2026. I've been saying 2025 in a few videos this week, and I actually titled the videos 2025, so give me another few weeks. I'm going to get it right eventually. Today was another wild day in markets. It's been really a wild week, a profitable week, but a wild week nonetheless. And today we saw kind of a slow start, then markets rallied and sold off in the afternoon. And at least for the crypto side of the trade, or the crypto adjacent side of the trade, a lot of that was related to the fight around the Clarity Act. And I have to hand it, outside of, their large fees, Coinbase and Brian Armstrong have really been pushing to get sensible wording in this Clarity Act. But the banking lobby is pushing against that, and they're trying to cut the bill off at the knees because banks live and die by their deposits, and stablecoins threaten that model because stablecoin issuers, their reserves sit in cash and short-dated treasuries, which currently yield far more than what banks pay most depositors. So if the stablecoin ecosystem were allowed to pass through competitive yields, even indirectly, they would become a serious alternative to park cash as opposed to traditional banking institutions. And we all know, playing in the crypto world, that there are many better places to keep your assets than cash in the bank. So that impacted Coinbase. It obviously impacted Circle. Robinhood got impacted by this. A lot of the fintech and innovation players that are on that side of the crypto trade, rather than, say, CleanSpark and some players like that, did much better, and crypto is still holding up. Anyway, it's been a long day. I've had a ton of classes. It's late, so I'm going to keep today's video a little bit more tight. I want to look at the indices with you, a few key names, and then we'll save the bigger video for the weekly wrap-up tomorrow. So let's get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and you can see we gapped up. So from the close yesterday, we jumped up all the way here to 69.69, and we closed this previous gap down. Now we closed the gap up, and we are fairly neutral on the charts. We are still holding support, and we need to see if we can break these previous highs at 69.85 roughly. If we do flip over to the NASDAQ, you can see a similar story here, where we gapped up pretty darn aggressively, and we closed the previous gap down right here, and then we sold off throughout the day and closed the gap up, I suppose you could argue, is from down here. As long as we get back to the body of the candle, I'm usually okay with that. And we are holding our uptrend. So we want to see this hold this diagonal uptrend tomorrow, and ideally we need to break out above 25,850, let's say, for round numbers, to pass these previous highs and continue into an uptrend. I'm not saying that's going to happen tomorrow, but by the 26th here of January, so that's, after next trading week, that would be the latest that we're going to make a decision here on the NASDAQ. All right, SMH, semiconductors continue to be strong. Fresh highs today, selling down a little bit, but finding support at the previous swing high. And the point here is just that mega cap tech is underperforming, which is a drag on the NASDAQ, but semiconductors are outperforming. Without semiconductors performing as well as they would be, I would argue that the NASDAQ would be in a bear market already. I would say that without semiconductors holding this up, we would already be seeing price action doing something like this, dropping into more of a corrective pattern. So something definitely to watch when the semiconductor side of the trade is no longer coming along for the ride. Unless mega cap tech can catch a bid again, we might be in a little bit of trouble there for the NASDAQ. All right, gold and silver stalling the last 2 days alongside Bitcoin. Dollar, not much to really report, just kind of flat on the day. And then if we go over to natural gas, to NG1, I actually got into a position. I've been talking about this the last couple of days, and we hit my level where I have my dotted line here, which we can delete now. But I have my blue trend line here at 299, and the Confluence Model Center Cloud was coming in right there on natural gas. So I got in a position via Boyle. You don't want to be in levered funds too long. I got in at 15 1552, something like that. But if we compare this to Boyle, which we can do in just a second, you can see that underperformance. So here's the natural gas chart. And if we go to Boyle, one of these did not perform as well as the other. That's because these leveraged ETFs rebalance and bleed out a little bit every day. So that underperformance is clear. And this is looking back at all of 2025. So if we're in this, we only want to be in it for a short move. Okay, Bitcoin the last 2 days kind of looks like gold just cooling off, but I would suggest that there's nothing wrong with it. It's just catching its breath. We broke out of this major zone, that 94,600, 94,700 area. Came back, tested it for support, and we're really just between support and resistance. We have 98K resistance at the fib level right there. That's our 382 fib level. And anywhere chopping around in this zone, even if we backtest this for support, I'm not really worried about it because the market is comprised of two kinds of moves, impulsive and corrective moves. So get an impulsive move, then we see a lot of overlapping price action, impulsive move, overlapping price action or correction. So perfectly normal, nothing to worry about. Really, if we look at the 4 hour, let's bring in RSI and mean reversion just to see if we can see anything. We're still fairly elevated on RSI and mean reversion on the 4 hour. On the 1 hour, good. 1 hour, we're starting to get a mean reversion dot, and RSI isn't reset all the way, but in this entire uptrend, the RSI on Bitcoin on the 1 hour has roughly been bouncing from this zone here at 43. So we have a reset, at least for the uptrend, a mean reversion dot, and often this can mark a daily higher low. Okay, I wanted to talk about GLXY because we just got in a trade a couple days ago, which is up nicely. But I know a lot of you here also follow InvestAnswers, and he hedged his position today on this move up. And I just want to talk about timeframes and objectives because right now you would argue that just looking at the price action, this is really positive. We have a triple bottom in play. We just passed that intervening peak, which puts a price target of $38 on the table, which we're probably not going to get to right away, but we're seeing increasing volume. Everything's looking positive. But if you look at this on the 4 hour, which is, I imagine, what James was looking at, we broke above both confluence model bands. There we are. They're finally loaded. And we're really spiking on the 4 hour right here. So yes, this probably needs to cool off on the 4 hour. We also have a fib level we just passed at 30. But on the longer time frames, we are most likely going to get to that $38 target. Now, this will most likely mean revert, and I would suggest support should come in between $28 and $29. And then we have these expanding confluence model upper bands. So with this getting elevated, you would imagine that it can take a swing and another swing. Maybe it gets to our price target in 2 swings. Maybe it takes 3 swings. Who knows? And then it'll break down to reset. I have no idea what those sound effects are. Sounds like someone's playing Frogger. But anyway, so if you're looking at this over the next few weeks, holding this into February, that's probably when we'll hit that price target. But if you're just hedging for a short-term volatility spike that may mean revert back to the downside, I think that's what James was doing. But overall, I would give this more time. And when you're looking at the smaller time frames, I like to default to the daily and say, okay, mean reversion still has room to go on the daily. So over the next couple weeks, I'm assuming we're getting up to this area. And our price target, we have the confluence model center cloud as resistance, which is at 36. So maybe we stop a little bit shy because we also have a fib level there, very important zone at 37. But you can start scaling out of a trade anywhere in that window. All right, one other one I wanted to revisit that we got into an additional position on the other day, because I'm already in shares of LAES, and I just wanted to add to the exposure for a potential move via call options. So we got in those around this period here in the low $4 range, broke out today, hit the next fib level, the 382. And I just want to talk about the different time frames here, because this is very similar to GLXY, where the daily suggests we have a lot more room to run. We have a price target up at about 680, I want to say. Need to actually pull that up once we go to the 4 hour time frame. Here it is, 603. Sorry for the price target for the local one. I misspoke. We have a larger price target in play from this symmetrical triangle here, but the local price target is 603. And we're making our way up to that. The 1 hour chart has plenty of room to move, but we hit resistance, and the 4 hour is starting to get to the top of the range and get a bit extended on mean reversion. So it's perfectly normal that you can see a pullback on one time frame while we still make our way to the target on the larger time frame. And the way these confluence model bands are squeezing, I would not at all be surprised, even though we had a little breakout moment today, to see this just chop around and consolidate for a bit before taking that next move higher. That would be perfectly normal. So different expectations for different time frames. Don't get faked out by some of these short-term moves when you see a price pattern confirm and you have higher targets to the upside. And outside of this, if we just measure out the larger pattern here and we take this whole thing as a symmetrical triangle pattern, this would actually point to quite a bit more upside. And we'll take the conservative measurement here. That one would point all the way to about $10 here on LAES, which would be quite the nice return. All right, let's just check in on Adobe and the Magnificent Seven. So Adobe is trying to find a base today, keeps getting support right around that $300 level, just above it there. So good sign on the 4 hour. Let's look on the daily. The daily, we haven't printed that mean reversion dot yet, but we're bottoming out on the RSI. So this is telling us that some kind of turnaround is coming soon. And let's get to all the Magnificent Seven. Let's see, Microsoft continued to sell off today, not really giving us a chance for a secondary entry with this continued weakness, almost to the price target of 425 there. If we go to Meta, I believe recovered a little bit. I haven't been tracking it closely. Yeah, attempted to recover a little bit here on the daily. I would love to see a bit more of a recovery to try to get out of this one, but we've got support coming in just below at that $600 level. So no trend flip yet on the 4 hour or the daily for Meta, despite trying to stabilize. And if we look to Amazon, red day, but also tried to stabilize, find its footing right here. So really generally flat on the day. And Google. And this one I want to cover in a little bit more detail because we are almost to our price target on Google. And let's remove these fib extension levels. So we have our primary target here at 350. And we're making our way up to that nicely. We definitely have a bit of a bearish divergence here on the daily. And I think the weekly is a really helpful time frame to look at these outsized moves because we are spiked at 2.3 standard deviations to the upside. And Google has never been that spiked on the weekly in its history. And we're getting to a level of 84 where generally Google tends to turn around anytime it hits this zone here in the charts. We start to see a little bit of a cooling off. Now, is that going to happen tomorrow? No. We're probably, honestly, going to make it to that price target, but we're getting close to the end. And the other thing you can see here, we have a bearish divergence starting to form on the weekly with lower highs on the RSI, higher highs in the prices. So the point is, this would not be the point where I would chase Google. If you're in a longer term position, once we get especially close to 350, that would be a period to consider selling covered calls because you're getting these signs that things are going to mean revert again back to the downside. All right, and last one, I just wanted to cover a couple of the metal trades that we're in. So USAR, it is starting to recover, and we're attempting to break this neckline here to confirm this potential double bottom price target, but it is struggling a little bit at the point of control, and we are a little oversold on the daily. So the question is, overbought on the daily. Are we going to pull back once more? There could be some kind of complex inverse head and shoulders or something forming up, but let's keep an eye on it. The other couple names, CLF is starting to break out and move away. So exciting price action on CLF. And our near-term target for that one is still that $19 level. So that's what we're attempting to hit. And then we have some larger time frame patterns. And then RIO is continuing to perform, making its way to that $98 price target. And I've been scaling out of this, but I think now I'm just going to look for some kind of blow-off move. There were just news today of a partnership with Amazon to develop their own copper mine that RIO is managing for a two-year contract, I think. because Amazon doesn't have enough copper for all its data centers. So picks and shovels doing well right now. You know what? I keep saying it's the last one, but we got to talk about Unity really quickly too, because we had those 2 aggressive days of selling on Unity, and we had a good bounce up today. We've got an inside bar going here. Need to see if there's follow through. This got swept up in a lot of the AI and software fears, just people scaling out of that side of the market. Now, we do on the daily now have a bit of a downtrend forming that we definitely have to watch. I'm not saying it's over for this, but we clearly have higher high, higher low, lower high, lower low. So a shift in trend if we're just looking at this. Now, if we zoom out just a little bit and we compress this, you could easily argue that, well, this is higher high, higher low, higher high, higher low. Are we just going to bounce from this level here and then continue on to that near-term price target of 66? That's the question. So there can be trends within trends, and zooming out and viewing these larger swings can be helpful. We're definitely back in the center band, and let's see if the 4-hour helps give us any guide. Well, the 4-hour bounced off the lower band, and now it's rejecting at the center band. So if this is strong, maybe it can push through tomorrow. If it rejects, I would expect at least another swing, maybe 2. Perhaps we get down to that 37 zone, but we're going to find strong support around $37 to $38 if we do continue a little bit lower on Unity. The argument for recovering now would be that we tagged 30 and have a mean reversion dot, but we can often see things stay oversold a little bit longer than you would think. Okay, so that is it for the charts. I would say generally when we're looking at markets, there's a bit of chop. We need to see the S&P 500 and the NASDAQ breakout. And I think we need to see mega cap tech come back along for the trade, because for months now, mega cap tech has actually been underperforming compared to some of the smaller players. And we're really starting to see that broadening into other sectors of the markets. So watching that weekly close, watching how these patterns come together as they really are getting to their apex is going to be very important. And then crypto, I would say, is just catching its breath. It does feel to me like it's got another move in there, but it's been interesting with mega cap tech selling off yesterday, some other segments of the market selling off late into the day today. It seems like this year is really, we've been saying this, it's a year for picking the right assets. So it's much more of a stock pickers environment. I don't think it's a year where you just want to be in a basket of assets. I would say it's never a year where you just want to pick the indices. But timing and picking the right assets is going to continue to be important. So we'll keep doing that together. I hope you guys all have a good evening, and I'll see you tomorrow for the weekly wrap up. Bye for now.